In today's video we will study a live trade that happened in the British pound versus the US dollar in the 30-minute timeframe. This is one of those simple trades that you can find using the fractal flow strategy. Beyond being a simple trade, this is also a very common situation that appears on a daily basis in all markets. Without further ado, let's start understanding the mechanics of this trade. Observe that in the number 1 through number 4 we have an upward pattern created by higher highs and higher lows. Number 3 consolidates the fact that buyers in number 2 have enough power to move the market in a significant way. Number 2 also displays a very clear turning point line market by the horizontal yellow line. The turning point line can have a few different uses. In this case, since we have a smooth transition in the internal side of the vectors between number 1 and number 3, the turning point line can be used as a demand line. Oftentimes you will be using turning point lines to determine the upper and lower limits of supply and demand zones, but that's not the case in this example. In the realm of momentum analysis we also have a hidden divergence happening between number 2 and number 4. The combination of all these elements enables us to focus on number 4 as a good entry for a long trade. Beyond being a good entry in terms of precision, it is also a good entry in terms of risk structure because we are near the low number 2 where we count on buyers to sustain our long position. To sum it all up, we have 4 different elements that make it possible for us to trade in number 4. We have the hidden divergence, we have the demand line in combination with the upward flow pattern, and we have the correct risk structure for the trade. The very last thing to determine in this example is the target, which is going to be derived from a Fibonacci retracement tool. We will place the retracement tool in the last significant vector created by buyers, which is represented by the numbers 2 and 3. The target for this trade will be placed at the 261.8% level of the retracement, which is a more conservative target in relation to the use of this same level in an expansion tool, for example. As mentioned before, the stop loss was placed a few pips below the low number 2. Let's see how this trade develops. As you can see, price exploded to the upside a few minutes after the opening of the trade. This type of situation reflects the perfection of this type of trade, especially in terms of its risk structure and trade location. A small stop that is placed logically and not arbitrarily combined with a large target is the best way to ensure long-term success in any strategy. If you wish to understand more about the various patterns contained in the various trade scenarios, check out the strategy store link in the video description to access the fractal flow strategy. If you enjoyed this video, please support the channel by clicking the like button, subscribing to the channel, activating the notifications button so you don't miss future uploads, and by leaving your feedback in the comment section below. Thank you for watching.